Hey guys, hope you are all having a great morning. Today we start a series that will unfold and explain how cryptocurrency market manipulation happens. Much of the systematic literature we are about to dive deep into is built upon much of the work by publications at ResearchGate. Most notably, I want to thank three authors, Felix Eigelshoven, Douglas Perry and Andre Ulrich. Their amazing work and due diligence inspired some of the foundations of the arguments I am about to present to you, so big shout out to them among the other hundreds of other important individuals whose work contributed to this series we are about to launch. Cryptocurrencies are a new class of digital assets based on blockchain technologies. With their inception came a huge change for the entire world. Cryptocurrency brings many advantages that cannot be negated nor understated. They offer lower transactional costs between parties, they have increased security and most importantly, have amazing transparency. They are also relatively easy to understand and can offer an amazing opportunity for people to grow financial wealth. However, their existence is not all gracious and perfect, for cryptocurrency does not come free of disadvantages. With their ever-growing popularity, cryptocurrency has also attracted the eye of sharks, of vicious predators who work for Wall Street among some other places. As we all know, by existential nature, the primary drive for Wall Street is to generate vast amounts of money, as much as it can, through any and all means necessary. As such, some of the same manipulative tactics they have employed in the stock market as well as the housing market can be easily observed in the cryptocurrency markets. Though there is much research out there that aims to distinct and identify various manipulative schemes in these emerging crypto markets, a need for a clear and forward holistic description and classification for current cryptocurrency market manipulation schemes has grown, and that is the existential purpose of me developing this series. It will serve as a classification guide, giving an overview of market manipulation methods and characterization of such methods so as to help identify market vulnerabilities. I want to stress that this series will not cover every single existential method as many are emerging, evolving or outright being discarded. This is detailed overview, but an unfinished and an imperfect one at that too, since I myself acknowledged researching all of this would take me a couple of lifetimes to finish. Still, expect to have an objectively increased knowledge of market manipulation and tactics revolving crypto markets, expect to be able to be assertive in the way you think about such problems and expect to be able to have a great foundation by which you can continue on your own doing your own research into this matter and not be handicapped by codependency on any figure to guide you through basic concepts. This series has taken time to make, a ridiculous amount of time to research, and a burdensome time to put together for you guys. My general morning video audience is somewhere between 5 and 10,000 viewers. I have a request from you only if you watch this video completely and find it useful. If you make it to the end and indeed found the video enlightening, please let me know down in the comments. Feedback is primordial if I am to fully add wrinkles to as many people as possible, so do not shy away from sharing your opinions on the video. If you want to go a step further and show the channel some love and support for all it provides you, I have links below for my Patreon and one-time donations, all up to you based on how helpful this video and the channel overall is to you. Before we start, let me quickly state that I am not a financial advisor, and that all content discussed in this channel is simply information gathered that I deem important for people to know, so that they can make informed decisions. All efforts are aimed to better understand the nature of the current market in anticipation of the greatest squeeze in financial history. Let's get started. Cryptocurrencies are out and about, and they are the new hot topic everywhere. The news, celebrities like Elon Musk, Kim Kardashian and Tom Brady, students in college, heck, even your barber when he's trying to fix your receding hairline, everyone is talking about crypto. Doge, Shiba, Bitcoin, Ethereum, and a ton of other weird crypto coins as well are always trending on social media. The great majority of future generations to come are all going to be hopping aboard the cryptocurrency hype train, because not only is it a vehicle for future wealth, but because it's just as cool to belong to the various subgroups that are emerging as communities that follow crypto coins, bringing new followers from all around the world. You, your children and even your grandma is in it, because nobody can't deny the psychological allure of holding crypto. I consider it to be almost alike that of sailing across the sea to find treasures in America. You buy into some crypto coin and hope down the line it explodes, bringing your account into millions of dollars worth, setting you up for financial success for the rest of your life. It's impossible to not look at cryptocurrency with greedy eyes, and it's especially because of it that I have to come ruin the fun and say beware, as not everything that is might be as it seems. Let's talk facts before we start making dire conjectures or going down the rabbit hole, as I want us all to leap off the same footstep. cryptocurrency is a new class of digital assets that is predominantly based on blockchain technologies. Together with blockchain technology, crypto represent the most promising financial technology innovation so far this century. In fact, I will argue it is fighting to be the most innovative breakthrough in all of financial history, and I know I will be debated here, so we are just going to leave it at that. Due to the great capacity to support financial transaction making, disintermediation, as well as enable new service models, the potential that these new technologies hold, these new coins, to forever change the mechanisms of market and financial transaction is unparalleled to everything. The only thing I can think could rival this is a chip in the brain that allows people to transact between one another, but that's a tale for another day. Still, the fundamental concepts that cryptocurrency brings are key to bringing balance, fairness and order to a world that is corrupted to its core. By such concepts, I primarily mean the proof-of-work system of hash cash, which was actually introduced all the way back in the early 1990s. We are nearing 10,000 cryptocurrencies with a total market capitalization of almost $2 trillion. Because of their decentralized concept, crypto does not require central parties nor third parties to confirm individual transactions, as is the sad state of affairs with current fiat currencies. Decentralization is made possible through consensus algorithms, which provide a set of rules that allow peers in networks to reach a common agreement about the state of the network. This relationship between decentralized and peer-to-peer structure that cryptocurrencies have offer a variety of advantages as well as investment opportunities that traditional fiat monetary systems simply don't have, cannot emulate and will never be able to compete with. Some of these advantages are, as I have already mentioned, lower transactional costs, increased transactional security and privacy, transparency and higher efficiency for transactions. However, cryptocurrency is not without its disadvantages, and in particular, its decentralized nature, which gives it plenty of advantages over traditional monetary systems as previously stated, does often work against crypto. The main and biggest one of the hindrances is the absence of a central third party that manages cryptocurrency. By not having this system, it is almost impossible to regulate crypto, and more importantly, it's almost impossible to protect it from price and market manipulation. The extent of the manipulation that happens in crypto is unknown, but that doesn't mean I don't have figures for you. Some researchers suggest that the price spike that Bitcoin experienced back in 2013 from 150 to 1,000 happened simply because of artificial trading bots implemented by the owners of a popular exchange. Furthermore, new research also suggests that the rally to $20,000 that Bitcoin experienced back in 2017 was the result of a large-scale market manipulation of a single entity. Given the growth and shift from fiat monetary systems to cryptocurrency that the world is experiencing, it is without a doubt that market manipulation in the crypto markets is one of the biggest threats to the well-being of people. Market manipulation, which refers to the set of practices that influence the pricing of an asset through unfair measures, distorts prices and hinders the efficiency of the allocation of resources. Let's begin diving deeper. To understand the dynamical nature of crypto market manipulation, first we must come to appreciate the role that cryptocurrency exchanges have, because they play an integral role in cryptocurrency markets. This is because crypto exchanges provide liquidity and facilitate price discovery. Though the growth of Bitcoin, we have seen new altcoins, which is the name for alternative cryptocurrencies to Bitcoin, experience a growth in numbers. Much like the stock market, crypto exchanges have two main order types: limit orders and market orders. In case you were too smooth, a limit order is an order that has a specific price a user wants to perform a trade for. A market order executes the best bid or the best ask, depending if the order is a buy or sell, at the moment the order is submitted. Now, something that is essential for you to keep in your head as we dive deeper and deeper is that crypto exchanges can be classified as both centralized and decentralized. The difference between each is that centralized exchanges keep the assets of a user in the wallet of the exchange. Examples of these exchanges tend to be central companies or organizations, such as Binance or Coinbase. The decentralized exchange, on the other hand, use either smart contracts or peer-to-peer networks to execute exchanges. On a decentralized exchange, users do not necessarily trade with each other but rather with a liquidity pool. That is, the price of a coin such as Bitcoin is calculated using an exchange-specific pricing mechanism. Because users are not sending their money to an exchange wallet like they do for centralized exchanges like Coinbase, the decentralized exchange often carries greater risk of market manipulation because there is quite literally no supervision and users are not enforced to verify themselves. Some grand-scale comparisons have been made between cryptocurrencies and other more conventional financial assets, and the results demonstrate that crypto indeed experiences more price fluctuations, which is a risk per se for investment. Cryptocurrencies face greater volatility and much more fluctuating liquidity, which affects its value proposition for both normies like us and big institutions like banks, hedge funds, and even governments. Recent studies performed by academics have demonstrated that, objectively speaking, price discovery processes are greatly affected not only by macroeconomic fundamental elements like supply and demand or intrinsic value of underlying assets, but also by an array of unconventional factors. These include news about potential bans, like what we are seeing with India, or regulations, which is something America is trying to do. Also, exchange hacks and current hash rates also deeply affect price regulation. I don't think I need to paint you a picture of what it would look like for an entire exchange to be hacked, even if for a brief period, and for the hackers to pump certain coins so that they themselves can sell their holdings at a pumped price point before the owners of the exchange take it back in control. By the way, things like this have already happened, but at very small scales. Imagine though, if a notable exchange like Coinbase was hacked by basement dwellers looking to make huge bank. Yes, it's incredibly unlikely, but it's still possible. Imagine the damage they could do if they allocated all the funds to pumping something like Doge. The damage would be so disastrous we could see all of crypto lose value for decades. Also, since now we have ETFs in the stock market following Bitcoin and other leading cryptocurrencies, you can expect a huge blow to the stock market in general as well. I think it goes without me saying that crypto has brought in a bunch of uninformed investors who might not even know the definition of blockchain technology, and some of these people actually dominate many of these crypto markets. Uninformed investors typically rely on noise by the crypto community in social media and private forums and groups to amplify the volatility of markets in order to create pump and dump schemes. The herding effect is real, and by creating a fear of missing out in social media posts, they bring in more and more people, subjecting them to risks they themselves do not even comprehend. And this is where we begin talking deeply about market manipulation. However, I also want the first video to be mainly introductory and easy to grasp, and don't want to complicate it too much, so this is a good stopping point for us today. Remember, if you are still here, drop down in the comments and let me know what you think of the vibe of the series, if things are relatively easy to learn and understand. We are going to cover the depth of manipulation in the crypto markets, so be sure to give me feedback. I am trying to smooth this out as much as possible while also respecting your intelligence so that we can elaborate profoundly. Let me know if you are like the vibe and feel of this video, because I have around 3 to 5 more episodes like this dropping every morning this week. Be sure to comment, and if you want to take it a step further and support this channel, I have a Patreon link in the description as well as some one-time donation links for Cash App and PayPal. Thank you again for being a part of this channel. I will continue striving for better content. Hope you keep having a great day, and I hope to see you later today on the recap video. Until then, keep on buying the dip into the moon.